Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful. Roll time. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you guys buy it. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. Well, it appears that risk sentiment here this Friday has kind of reversed on us somewhat, and the Treasury market already acting pretty cray-cray. So a bunch of Ukraine headlines. We got explosions in Kiev, and it appears that the Russians are attacking the airport again. So I think they're going to try and make this push because not being able to hold the airport has been a big problem for the Russians. Excuse me. So coming over here to the charts, looking at the overnight action here, you can see S&P 500. You know, they had an amazing day yesterday, but we are slightly lower here this morning. But I think that the move is a little bit more pronounced in the treasuries, seeing quite a bit of a move up. But now here, right after the open, a pretty aggressive move down. And I have to say, particularly in the 10-year, I think that the selling is a little bit overdone. But that selling pressure might continue for a bit. So over here, we got oil. Oil having a pretty hard reversal yesterday, but now kind of heading on the way back down. You know, on this sort of a situation, when the whatever it is that's pushing them down, in this case, the Ukraine, risk premium that's being built into oil, when that came off, you are going to have a little bit easier of a time coming back up here. But this move right here, I don't think that we really know where oil is going to go here in the next week or two. Could come all the way back up here and even go higher, frankly. But we could also see a return back to like 85. So a pretty high risk trade over there. Natural gas. Natural gas is on the up a little bit. Gold and silver. Well, gold and silver did well yesterday, surprisingly. We are seeing the dollar get weaker, so that I think is kind of what's pushing them over there. I want to come over to Bitcoin. Oops, wrong button. Bitcoin is kind of, I don't know. There's been all sorts of odd moves in Bitcoin. Kind of appears like large whales trying to make moves and then nothing happening. Excuse me. I do think that they are vulnerable on the downside here, but it would really take something to get that ignited, right? So that's basically where we're at now. Today, the big key element that we got to factor into our trading is the options. So I think it's pretty safe to say at this point that there is a huge amount of options interest in the options expiring somewhere around 4,400, right? They shot back up there yesterday. It was a really insane, crazy rally. And now overnight, they're kind of losing it. I do think that the S&P 500 will have a tendency to gravitate back towards that location. You might see some names that have excessive volatility and other names be a little quiet. I don't know about the treasuries here. I kind of thought that the treasuries would be one of the ones that was a little bit quieter, but it's already moving a lot. So I don't know, man, I need to blow my nose. Hold on. You know what the problem here is? I have a puppy. You've seen the puppy. He's cute. He is cute AF. All right. We've been pretty good at teaching him not to bark, but we haven't taught him to not whine. because maybe he needs to go outside or to the bathroom or something like that, right? Well, my wife is just a pushover, and if he starts whining in the middle of the night, he will get him out of the kennel and put him in the bed. And then he wants to sleep on my face. I don't need, listen, I'm allergic to you. Severely allergic, supposedly. I don't feel like I have a severe reaction to him, but supposedly I'm severely allergic to him. So it's not good. He's sleep on my face, and then I wake up and I got this gunk I gotta clear out. Anyways. Hmm. There we go. So I don't know. Oh, you know what? We are unlisted here. How did that happen? Public. There we go. There we go. Refresh that. Should help you guys find it. Congratulations to the one of you that are watching that use the permanent stream link. Yeah, I saw a lot of headlines about this. A Chinese aircraft carrier sails through the Taiwan Strait. It's like, okay. PogFed needs to let happen. I'm not convinced that it needs to be sub-potential growth. It just needs to be not as extreme as it has been. I guess, is that sub-potential growth? I don't think you ever want to be like max potential per se. Max potential really means you're juicing it. You're juicing it. There we go. There we go. Now you guys are finding it. I'm sorry. I did not set the stream up correctly this morning. Well, I'm a little torn on which way I kind of want to take the treasuries, because I do kind of feel like that. Well, here's the thing, that the 10-year is moving too much. This one, the 10, the 7 and the 10 are inverted. And I think it's because everybody was trading the 10 because of the low liquidity. So that means that the 10 probably needs to, ZN probably needs to back off a little bit compared to the TN, right? Democrats worry Zelensky offered GOP key talking point. What's that? Let's read this. On the Hill, one Ukrainian president, Volodymyr Zelensky, spoke to members of Congress on Wednesday and pointedly highlighted President Biden's role in helping to stop the ongoing Russian invasion of Ukraine. Some Democrats worried that he was handing Republicans a new talking point, despite there being an uncommon bipartisanship in Washington for wanting to help the Ukrainians. The GOP for months have tried to drive a narrative of Biden being a weak leader, and Zelensky's words, even Democrats acknowledge, could become fodder in the midterm election season. I think it's a very real possibility, said one Democratic strategist. I know we keep saying we're doing everything we can, but clearly there's a lot more we could be doing, and I'm not just talking about sending in troops. During the final moments of his virtual speech to lawmakers on Wednesday, Zelensky switched to English for emphasis when speaking directly to Biden. You are the leader of the nation, of your great nation. I wish you to be the leader of the world. Being leader of the world means being the leader of peace. Okay. I don't quite see the talking point, but doesn't sound to me like he really said anything that would really be problematic for Biden, that is. I don't know. One of the things that I kind of see going on is that people in Congress, they do want to do everything that they can, but they don't necessarily know what's effective. For instance, the no-fly zone, probably not too effective. Russia doesn't have air superiority anyways. Most of the strikes are coming from missiles and ground-launched rockets and not from the air. When was this? Leaders are in possession of very reliable evidence that China is considering military assistance to Russia. The EU will impose trade barriers against China should Beijing proceed with Russia's request. EU-China summit is scheduled for April 1st. That's the most terrible day to ever do anything, but okay. Man, you see, like the 10-year, they kind of sitting down there at the lows. It's just like they came out and they said, nah, we don't like this overnight high thing. We're going to sell it again. I don't know. Maybe they have some bonds to sell, though. Who knows? The move over in here actually hasn't been too bad. If they're not careful, though, well, maybe somebody is trying to invert the curve here. Dude, that is a very real possibility that we maybe need to consider here. Because look, the 10-year is at 2.167, and the 5-year is at 2.157. So the 5-year is a mere, it's a mere 1 basis point or so away from inverting. Yeah. When I come in over here and I look, well, yeah, and I definitely see on this move down flattening. So I think that this move down that we've been seeing, we shouldn't read it strictly as a, risk on higher yields, etc., across the board sort of a move, like that's the bet that they're making, but rather a part of some sort of spread trade where they sold 5s or maybe even 2s. I don't know. Well, 1 basis point of flattening. Can we quantify any of your order flow trading strategies like your meta order concept and then code it and let it run and make money? Well, so I have done a lot of work in trying quantitative strategies based on order flow. I have found that it's easier for me to find a strategy that is profitable to some degree and works um, when it's using order flow. But the back testing for order flow is also a little bit sketchy because th- it doesn't perfectly mirror real life. They have to kind of reconstruct things. So what we've had happen to us a bunch of times is we'll put the algorithms into the testing period and they'll go through times where they just don't work very well. And it's unclear to me if that is a flaw that you wouldn't normally see from the back testing or if it's just that particular market was really poor, you know? But I think that the bigger thing here is that uh here I would again warn people against falling into the fallacies surrounding technical analysis. A quantitative trading strategy can work, but you want to be careful about the idea that the market is ahead and that it contains all available information and that sort of a thing. So if you come in and you say, I'm just going to follow the market, that that tends to have some issues. Um, and generally the thing that I find is that by the time you've seen enough of a statistical aberration in the data for your algorithm to want to make a move or whatever the deal is, just like it is when you're sitting here watching the movement. It's like as soon as it wants to do something, the trend stops, you know, and you all end up getting sucked into the liquidity hole. So, I think that if like here's the thing, like algorithmic trading um is very difficult. I don't think that people realize uh that making money from algorithmic trading is way harder than making money from discretionary trading. And there are a lot of things that you do as a person that are very hard to program, and some things that are impossible to program. You know, understanding the current news and sentiment and all of those situations is crazy hard. And you're able to come in and say, oh, okay, well, here's like this, and this thing that are relevant to today, right? And you can just list them out. And maybe it's like 5 things that are relevant to today, right? But there could be like a list of like 30 or 40 different things that you're actually considering, and your brain is just able to narrow in on those 5 things and see them, right? And so if you're going to write it out programmatically, that's like 50 things that you have to program up, right? So it's it's a lot of work. Oceanic, hello. Okay, so bonds backing off a little bit here and maybe some steepening coming back into the curve. Hmm. They're flying Z flags along with the national flag in Moscow today. Oi. OPEC Plus complains rises to 136% in February, sources say. That's good for oil. I mean, it's good for oil prices going down, that is. I don't know, guys. Do you think that the treasuries are going to continue falling and go let's say treasuries, let's do a poll, okay? We'll just do a really simple poll. Treasuries, up, down. Ask your community. Vote now. Do you think from here Treasury's up or down? Down would be like the overnight lows. Up would be retracing this strong down move that we've had. Totally possible. Totally possible that we just flip right back up. Now I'm not too sure which one it's going to be. Did steepen back up by a tick or two, though. And quite quickly, I might add. And the S&P 500 is looking pretty okay at the moment. How does spot absorption, and can you define absorption in terms of psychology of market participants? Well, okay, so the thing is, so first of all, what you're going to see on the DOM when you're getting absorption is in the center columns, you're going to see larger numbers, right? It's going to go through in the Treasury, it's going to come through, and you're going to find a point where there's like 3, 5, 7K at each price trading through, right? That ends, and it could be with icebergs, it could be just large orders resting on the bid. There's lots of ways that happens. When you happen it in the ES, you're going to see it across a range of prices. It's like right now, only 40 to 100 contracts are required for it to trade through a price. And all of a sudden, it will still be moving through, but it will be like 300 contracts at a time. Okay. Right. So now the thing is that when we see more limit orders, that means that it's going to be harder for price to get through that area. You're going to require more market orders to get through there. But here again, don't make the mistake of believing that the market knows all available information, right? There could be many different reasons why the participants are trading the way that they are, right? Now, if you know why they're trading it and you see the absorption and it's in your favor, then take it, because that gives you a spot where you can potentially reduce your adverse excursion, right? If there's more limit orders there, if you get filled on the limit, right, then typically, unless there's a lot of market orders going through, typically it's going to be harder for them to continue pushing through you. But you really still have to have a larger kind of a thing, right? Because if you don't know what's going on, you know, maybe it's a hedge, and that is often what is the case, right? I think that the most classic newbie mistake, I really like from an order flow perspective, the most classic newbie mistake is we're having a trend day, and every time that you see absorption against the trend, you try and take a reversal, right? And those are often just hedges, right? No informational content behind them at all. So you definitely want to watch for absorption and everything. But again, you got to remember that it's kind of a little bit, it's a tiny piece of the puzzle. And ultimately, the best information that you're going to get are going to be things from outside of the market that the market hasn't priced in yet, right? Okay, what are you using your market volatility analysis? So I have a video about using projected ranges to project how volatile the S&P 500 could be that day. And that gives very, very good targets for around about where the S&P 500 will go to. You can kind of do the same thing for treasuries. I have to say that at this point, I generally just kind of have an idea for how volatile it is overall. I mean, this market is very volatile. So, yeah, that's a good video. And I have a little indicator built in TradingView so that you can pull it up on a chart in TradingView, and you can look at the code for it to see how it works. Man, I had a hamburger helper last night and it did not smell good. Coming back out. You probably didn't need to hear about that, did you? I don't know. You think that they're going to reverse back up here or not? It still seems I'm awfully uncertain. I'm not sure. I don't have a strong enough bias to want to try and take a side on this trade. Fed's Waller, the data is basically screaming at us to go for 50 basis points. He's a non-voting member right now, right? It's an older video, yeah. It's a couple years old now. It was pre-pandemic, I tell you that. It was like 2019. Because I remember watching it and it being like, okay, this is like pretty good. It tends to get to the first line most of the time. You very rarely goes to the second line. And then all of a sudden, every day it was going to the second line and like well beyond that every day. And I was like, this is a little silly. I thought when the S&P 500 was really in the depths of the post-COVID or you know, like March of 2020 through May, I thought that was all silly. Okay. So now that wow. Okay, so that headline that I had read out about Fed's Waller saying the data suggests we'll be moving towards a 50 basis point hike, I just saw a bunch of other squawks report that as well. So I guess I saw it on Twitter before the larger market did, and it really moved the market there. And it flattened things again. And this five, when you counter in the spread, it is inverted. And the S&P is unhappy. Waller says I prefer front-loaded hikes. Okay, well, I guess that answers that question for the poll, doesn't it? How did we do? Well, there was only 8 votes and you guys were 50-50, so... I'm gonna go find it. There we go. Implied volatility targets. Should probably rename that. Here it is. Okay, well, that was a really wild move, but the market appears to be almost at least in the yields here. Oh, sorry, not at least in the yields here. Up in here, they're recovering that quite strongly. We can remove liquidity from the system without doing much damage. I'm not so sure about that one, Mr. Waller. Because the liquidity that I see, I don't think that he's talking about the liquidity that I see here on the DOM, but like, it's a little scary to me, you know? Not that many retail traders have traded this. That's interesting. Y'all waiting for me to click in on something? When I saw that the thing was I read that thing from Feds Waller and I was like, okay, but the market hadn't done anything, so I just kind of ignored it. But I really should have read that and been like, well, that should be a really bad thing for the market. I should take the trade. Then it'd already be out. Quick $15, right? I don't know. I think you're going to see some mean reversion in the spreads coming in pretty strongly. Oh, what? Really? Okay. I'm going to wait until they tweet it to read this next one out because I was like, okay. Yes, I agree with him on that. Getting to neutral should not be a cause for warning a recession. We'll get back to 2%. That shouldn't be an awful thing. He had said something about like that, oh, there hasn't been a lot of market turmoil since we made the pivot in November. And Forex Live asks, what would you consider a lot of market turmoil? Right? I'm sitting here like, that one seems a little out of touch. These markets have been nuts. This whole year, really, the markets have been crazy, especially the Treasury market. Yeah. That's Waller. As long as we communicate clearly, the market adjusts. There hasn't been much market turmoil. Yeah, that's I'm gonna retweet that one, man. Okay, so we're back to 2.17. Okay, well, we're back to, well, that's kind of interesting. There's been a difference between the 10 and the 7 again, because the 10 is back to where it was, but the 7 is not. You have a good source on Twitter? So I have a video about trading the news. You can go and find it on my page. And in there, I link to a list of news squawks. But I'll find it for you. Let's see here. So here is the video. And then I have a news squawk that I use, Financial Juice. That's about $100 a month, depending on how you bill it. Your cheapest option for a live news squawk. And then here is I'm going to have to do it this way. Copy link address. This is my list of, oh man, it's too big. It won't let me do it. You're going to have to click on the video link and there's another link in there. The redirect that it wants to give me is too big. But there's a link to a list of news squawks. And then what you can do is you can go into TweetDeck and add that list as a column in TweetDeck, and then you will see them come in live. If I observed 2-year inflation expectations becoming unanchored, I'd be more concerned about our credibility, but I don't. Okay. So, man, dem treasuries came back hard. Fed's Bullard says the rate should top 3% this year to combat inflation. Well, okay. That would be more than 8 hikes. That would be like 50 basis point rises for the rest of the year. Good grief, guys. That's on financialtimes.com. The lone dissenter at the central bank meeting says policymakers need to move quickly or risk losing credibility, which is what Waller's pushing back against. Oh, I don't think I've ever seen a picture of him. That's him? Okay. I thought he looked different. That didn't seem right to me. Well, whatever. I mean, that would be like 450 basis point increases, right? Yeah. Why is it that Glenn Greenwald always seems to want to support the Russian take on things? Here he's talking about the Western world claims that the whole world is united behind them over Russia, but the reality is some of the world's most populous countries, including 1 and 2, which I suppose are China and India, refuse to join this consensus. I don't know. It's a little more complicated than that, but why would you be focused on that right now? That little move right there is kind of like, okay, we're going to go again, but I don't know. Kind of the thing I'm thinking right now, though, is that I don't think Mr. Waller is done speaking. Could have gone long at 70, though. 17. There was a point that I think we could have gotten 16.5, but. It is bizarre. I don't understand the whole thing with that one battalion. I think that people misconstrue it a lot, right? Because my understanding is that it's like there's one battalion in the army where the members seem to have that leaning, but it's not like an official thing by the government or like a sanctioned thing by the government. It's just like there's some soldiers that are doing it and they're not doing anything about it. Like if you started putting that kind of insignia on you in the military, I think they would put a stop to it, right? So it's kind of a little bizarre. But I think the reality is that in Ukraine's position, I'm sure that it probably has something to do with that beggars can't be choosers, and Ukraine that can't really, if Ukraine wants to maintain its independence, they can't be choosy about who their who signs up to help defend them, I could be wrong about that, but I bet it probably that's something to do with it. But I really feel like it gets like that being the justification for like the invasion of a country is so silly, I think. What's here? Tim Seymour, it's absurd that not until November did the Federal Reserve express any concern about inflation, and now this guy is telling us he wants to raise it. That's bullshit. That is not true. He was concerned from the beginning. This is not the first time that he dissented. Tim Seymour, you are behind. You are behind. Let's go find this. Okay, so there's like from 2 days ago. Let's come into Google and let's say we'll use a custom range and we'll go from let's go to February and then go all the way back to last April. Go. Okay. Well, he said November. Right? So let's come back in here. Let's change this range and let's change this range to November because I'm pretty sure that he dissented before that, right? Must include dissents. I swear there was a dissension before that. Here we go. June? July? Well, maybe that was in November. Let's change it to only news. Oh, that's the same one that I just clicked. Hmm. Well, maybe November. Maybe November is right. Okay, maybe I'm wrong. Let's see what he said. What's the other things? I'll add one more thing. Paolo's no Yellen or Bernanke. His hawk roots run deep, and yet you have to ask the question, where have you been? And why are you going to take the most accommodative policy in the history of the world and go policy extreme in the other direction right now? I don't know. November might be right, but I mean, it seems to me that Mr. Bullard has been very hawkish and concerned about inflation for quite some time. Am I wrong? Let me close all these extra tabs I opened up trying to search for that. Newsquawk says pricing for 50 basis points move at May meeting now a little above 50% after hawkish Waller comments. This was about 35. Or was it really 35%? Because when we were looking at it on Wednesday, Wednesday it was about 50%. The last time the interest rate was at 50 basis points, the 10-year ranged between 125.09 and 134.06. What do you think? Well, so let's come back and look at that, right? So you're saying 125 and 130. Oh yeah. Well, that was like when it was like up in here, right? There's also this place that we can't see where it was a little bit higher, but the prices aren't going to be perfectly anchored to the interest rates, right? They kind of float against each other. It's kind of weird how it works. It's kind of weird how it works, okay? I don't completely understand it, but they're not the prices and rates don't sync up completely, right? You do kind of have to wonder if they continue increasing rates and they really do interest rate increases this year, that they go well below these levels over here. But we'll see. Because I think at some point you get to the place where nobody wants to touch it. It's just really hard to get anybody to buy the debt. I find it a little bizarre that was what everybody was worried about, was like a crash in the interest rate markets as interest rates rise before COVID. And now that we're in a situation where I think it's a little bit more of a concern, you don't really hear anybody saying anything about it. But this complaint from Seymour, I just am kind of sitting here like, y'all have known for a long time. Like, we all knew in May, frankly, we all knew in May that probably they should be tapering and starting to raise rates, but they're not because of the Omicron variant, right? And then we knew that they were, from that point on, that they were late. And yet there was still a large contingent of market participants that insisted that the Federal Reserve was never going to raise rates. Like, explain that to me. How are people so clueless? I don't get it. It's like the Federal Reserve comes out, tells you exactly what they're going to do, and then everybody is complaining that they didn't tell them soon enough. What? I don't get it. I don't get it. Am I crazy here? What do you guys think? Am I wrong? I feel like that we all knew what was going on. I need to adjust my microphone here a little bit. I mean, this 16.5, if you get filled, doesn't look like too bad of a risk reward position. It's kind of hard, I think, to want to be long interest rates after all that, wouldn't you say? German Chancellor pleads for ceasefire in call with Putin. What, don't you get that most people, even the most successful and filthy rich money managers, are clueless? I guess what I'm saying is that it seems unlikely that I could be so far ahead of everybody else in the market that consistently. Right? It's like a probability, by the way, the liquidity above us is a little questionable. Only 1,000's putting it up there. It seems to me that it'd be more likely that I'm reading more into Federal Reserve's hawkish comments because I want interest rates to rise than it would be that all of these money managers would be caught so off guard. What? We've taught this dog to whine. That's what happened. So now he whines when there's no reason. It's a puppy. Hello, I'm a puppy. Okay, but puppy, you know what? You're gonna have to go back in the cage. Oh man, I still didn't get 16.5. It came back down again. If you could only use 2 tools in your arsenal to trade, what would it be? The news, the DOM. I don't know. The DOM is a pretty wide tool, isn't it? What, I mean, that's basically what I use, right? Those are the 2 that I rely on the most. Nope, you're going to stay in there if you're going to be in here. If you're going to be in here, you got to stay in there because I can't pay attention to you, bud. I have to say, I'm not particularly inspired by the action that we're seeing in the Treasury right here. Definitely formed a hole of some sorts around 15 to 16, but market orders kind of seem a little wishy-washy. No. You stay there. You have a toy, chew toy right there. Chew toy right there. He has puppy dog eyes, guys. You need to get him out. I don't know if I kind of like the idea of buying 17, but I just don't like this moment for it. It's just like it's not acting like it's gonna be going. Now, if you behave, you can sit on my lap. But you start messing around. If you start playing, then I'm gonna push you back out to mom because you should just be playing with mom. he doesn't really want to play with that. Do you watch CNBC? It's amazing how many smart money people they have on a daily basis that have been completely wrong. I don't really watch it very much anymore. I should, because I learned so much from watching CNBC, but yeah, I don't know, man. I mean, the thing is that when I was making videos about this on TikTok and we were talking on the stream, there's always people that would say, nah, they're not actually going to raise rates. It was like, I don't know. At the time, I remember thinking that people are just hearing what they want to hear because they're making money from the low rates, and so they're willfully ignoring the writing on the wall. But is that really what happened? I don't know. I don't think I'm that smart. I do okay, but when I'm right and the whole market seems to be wrong, like for months and months on end, I'm starting to feel like I've got to be missing something, because there's got to be a reason that they all think something. It's kind of the same thing right now. I think that sometimes I'm just likely to be contrarian too, but the market sentiment has been so negative. The market sensitive, but like, what's going on that's bad? The Ukraine is the only bad thing. If it was not for Ukraine, we would be at new all-time highs right now. Like the jobs report at the beginning of the month was good. The inflation reports were pretty decent. Like, a lot of the things that we were concerned about have shown to be not so bad. Like this concern about a slowdown in the economy. Yeah, there was a little bit of a slowdown, but not like a huge deal. Yeah, I hear this, whispers in the news from time to time that COVID cases could increase again, but I don't think that anybody's going to care. I don't think anybody's going to lock down again or anything, especially not like just ahead of the midterms. Ew. Putin is now speaking in a big stadium with thousands of people around. Well, that could be a reason to go risk off around here. Yeah, I don't know. I'm a little... Well, okay, there's 15. So I've kind of been sitting here stalking a possible long at long in rates at 2.16.5. I could see it like right here at 17. I could possibly try and put an order out here and get filled, but I'm not too sure that the order flow right now is really in favor of that trade. At first, it was really slow. Now I'm seeing some market orders go long in an iceberg, so they just ticked up. I think that we're probably going to be in this area for a bit. It's either, at the moment, I'm thinking we're either going to be in this area for a bit, or we're going to reverse a little bit for when Putin speaks. Okay, we have done a lot to improve the situation of people in Crimea, says Putin. Bless you. This dog is sneezing like crazy. Are you allergic to me? Because I'm allergic to you. Okay, well, that's what he's whining about. Hold on. I say, what's going on here? Okay, you can lay down there. That's good. That's good. Good boy. Lay down. Lay down. Lay down. Lay down. Good boy. Now you're supposed to say, eh? LME nickel contracts traded in ring traded down to preset daily range in second ring session on 18 March, subject to disruption event. So they went through the whole thing again, huh? Well, I chose not to get in there. They moved pretty good there after I chose not to, right? Might still come back, so she really shouldn't be sending the dog in with me while I'm trading. I'm a little mad. The lockdowns will come back if Dems dominate the midterms, maybe. I really feel like the Democrats are over it. There's nobody out there. You just have to wake up at a reasonable time, Melissa. Gosh. Well, what do you think? Lower? Lower, maybe? What do you think I should do here with this dog situation? Now he's whining for me to let him out. I still feel I'm trying to really focus on these volume here. I mean, they did get that good sweep down. That was accompanied by quite a plunge in the 6J. So I think this is a situation where we can fairly safely go long rates, but I don't think I necessarily want to FOMO into a bad price because there could be some nasty pullbacks on it, right? Why all of the down pressure on the bond futures right now? Well, so there was some headlines about Feds Waller and Bullard both talking very hawkishly, and that was kind of the impulse lower. But when I look at the currency correlations right now, we're getting pretty strong down volume in the 6J. So that it seems like just this whole complex across the board is kind of seeing that pressure and may continue to do so as the E-mini opens. I suspect that the E-mini is going to be bullish off of the open, but let's see. It looks more bearish. So the only kind of how do I say this? I'm forgetting the word that I'm looking for here. But the calculation that I'm making here on the S&P 500 is that the gamma is locked to 4,400 and that they're going to make a push for 4,400 again. There could be a lot of drama before the end of the day for it getting there, but this is a little bit too easy for it to come back. Lay down. Lay down. Lay down. Let's see what leads today. Yeah. What? Yeah, that's pretty strong buy volume on the open, right? I told you. That doesn't really make me want to take it. I don't particularly like the way the ES is trading against it, though. There's two and the 2 and the 5 and the 10 right here being equal is a little concerning to me, I would say. Don't lick my arm, please. You need to stop whining. Can you hear him? I hope you can't hear him very well. You think there's a long opportunity at 43.55? Wait, that would be like, that would be really far down, dude. I would be rethinking myself if we even got down that low. Well, you're gonna get a pretty hard pullback here. You got something in your ear here, bud. Yes, you are very adorable, but you're also very distracting, and we're trying to focus here. I'm glad I didn't take a trade, right? I did have an order out there at one point, but it didn't fill me the way I wanted, so I gave up on it. Look at that. What do you think of that? The curve is not. So that's interesting. We're getting that move back there, and we're not getting another change in the yield curve. You went down? Okay. No, you can't go outside. Sorry. No. 16 isn't bad. I mean, that's where we were. Look at that. Are they going to give me 2.16 now? I don't know. Do you want it? Do you want it now? Because I tell you what, if you love it at 16, I bet you're going to love it at 15. I don't know, guys. It's a little bit of a... Well, the 6J is reversing a little bit. The gold is reversing hard here. Wow, gold is really flipped back up here. Not getting any news or anything. Oh, no. ZB is popping. Well, they are trying really hard to invert that curve, right? What? Okay. LME says London Metal Exchange says second ring session on March 18th in nickel will be deemed disrupted session, and all agreed trades during this session will be null and void. What a load of shit. That exchange has become a complete joke. You got to be kidding me. You come in and you trade, they just say, oh, nope, never mind, they're all null and void. Come on. Well, I'm a little bit worried about buying 16. I don't know. This is a little bit, the short-term volatility in the Treasury is higher than usual, I will say. Yeah. I don't know if I really had a chance to get filled at 16. Nickel in the news a lot, but I've never seen it trade. Well, it's on an exchange that none of us trade, right? Putin vanishes mid-sentence? What? Oh, because he's not. Maybe he's not really there. It looked like he was just being superimposed on top of something. That's weird. Hmm. Okay, well, the S&P 500 has been largely bullish. That was a pretty strong impulse buy on the open. The action since then has been very volatile, but is still trending to the upside. And the Treasury has been going back, around 124.16 quite a bit. The yields are reacting quite strongly to it. They're seeing all sorts of movement in the yield curve. The moment still kind of looks like they don't know what they want to do here in the 10-year, though. Hmm. Well, we'll see if they give us 160. Look at the spread in the 5-year micro. And the 16s, yeah. Hmm. Hmm. Okay, spread in the 10-year came down there a bit. Yahoo Finance tweets Democrats are split between the idea of a gas tax holiday and windfall profit taxes on big oil companies. Rick Mark Newman says, if you did impose windfall profits tax on oil companies, you would be raising costs and they would try to pass higher costs on to guess who, consumers. Yeah, probably. Probably. Well, now we have a chance to hit 16 if we really want. But as long as the 30 year is pushing up there like that, I don't know if I necessarily want to do that. Okay. Well, that was about the best fill-in micros I could possibly get. Let's see if we can get it to go for us now. This windfall, I find it really funny, the knee-jerk reactions that the Democrats have to things. Oh no, oil prices are high. What should we do? Tax it. Tax it. That will surely make oil prices go down. Oh my gosh. Let me tell you what. So here was something I saw I think it was Robert Wright that was saying this. He was saying, the oil companies are all making money. So what that means is that they could absorb the costs from higher oil prices. And I'm sitting here like, why should they be the ones to absorb the cost? Huh? Who are you? You get to say that this company is the one. If something happens, this company loses money and this company doesn't. Or this person loses money and this person doesn't. Like, it's one thing when the government picks winners and they make partnerships and do things to try and spur economic growth. But when they start turning around and start imposing losing conditions on companies, that gets scary to me. You know what I mean? It's all of a sudden the government can just say, yeah, you lose, you lose, you lose. What? What? That's a terrible idea. The Democrats are just coming up with some terrible ideas. And I think that they're sitting here flailing around looking for something to, help them in the midterms. But all of the things that they're doing are probably just going to make it worse. You go and you impose that tax on windfall profits. It's not going to help you win in November. Tax holiday is probably a better idea. Don't we already give subsidies to oil? Yeah, we do. That's what I'm saying. Like, we already pick winners. Now you're going to start picking losers? Okay, well, I really like the way that I got filled in the micros, but it's still kind of like liquidity hole at 16. Not sure that it's going to go anywhere. Still, just based on the price action overall, 50-50, whether we go up or down from here. I do think, given the S&P 500 looks bullish and the hawkish comments that we had earlier and all of these other things, that the rates are more likely to rise here. But I'm not terribly dedicated to this trade, I don't think. And I'm much more interested in what we're getting here in the yield curve between the 5 and the 10. Jeez. Well, I don't like this. Don't like it. You know, it was a little bit of a kind of a against the grain trade there anyways, so. S&P 500 continues going. Oh, well, when I'm saying that, I've got the 10-year Treasury up here. So typically, you know, if I was going long rates, I'd be shorting it. But that in the micros are yields instead. So what I'm really saying is short ZN and long 10-year. And it's just 10YR. Well, it's going to depend on your platform, but the 10-year micro Treasury yield contracts. See, now the Treasury is coming like back up to close to the open. And I'm kind of thinking that this move that we're seeing at the moment has more to do with the yield curve than anything, you know? I don't know if that gives you a really great probability. Maybe when we were back up here in the 80s, we should have taken a short, but. State TV cut out just before Putin finished the speech. He quoted Fyodor Yerkashov. Okay. Yeah. Weird. $57. I voted up on the poll. Well, I think that kind of the situation and the reasons that we were going in for the poll kind of got short circuited by the news anyways, right? Because I was kind of more thinking, which way is it going to go if we're just going based off of the options, right? That's what I was thinking. Well, one thing we should note, though, is that the 6J is kind of reverting here. Wouldn't surprise me if they went for another dip. So this is probably not over yet. I'm not so sure that I can sort out from the order flow at the moment, though, what this ultimately ends up doing. Like, I think that the we had some news volatility. I don't think that that's a dominant force in the market right now, right? Well, okay, so the reason they call it a quadruple witching is because there used to be another options exchange that no longer exists anymore that also had their options expire this week. And that's why it's called that's why this traders still call it quadruple witching, even though it's triple now. But yeah, that's why. Do you see them? How hard they're moving the longer end of the curve right now with the 30-year? I don't have the UB order flow up, but that must be a zoo right now. The UB must be getting hit hard. Did your favorite dream? No, I didn't even pay attention that March Madness is going. Hmm. Hmm. See, I'm really glad that I got out of that trade with only like a 3-tick loss, right? Biden's budget will be released on March 28th. That is the Monday after next Monday. Okay, so that is a pretty big transaction there at 19. Some pretty big targets above us too, by the way. That move up the yield curve was pretty flat across the board. Yeah, interesting. Yeah, I got the gourd too. I gotta tell you, the sports industry, like the NBA and so forth, are, I think, really hurting themselves by not providing better online options. Now, if you could just watch the NBA for free on YouTube, that would be like very different. And I bet you they would probably make more money from the advertising than otherwise, but I could be wrong. But there's just not as much interest in basketball as there was when I was a kid because nobody has TV anymore. Or at least partner up with like a Netflix or one of those, you know? Hmm. Missing the boat here. Just pirate live cable streams. Yeah. There's always people streaming that stuff, right? Hmm. Radio. Radical open mindedness is motivated by the genuine worry that you might not be seeing your choices optimally. It is the ability to effectively explore different points of view and different possibilities without letting your ego or blind spots get in your way. It It requires you to replace your attachment to always being right with the joy of learning what's true. I totally agree with that. I've never watched a Oliver Stone documentary about Putin. No. Dude, the Netflix price increase is such bullshit, dude. Oh, our earnings suck, so we're gonna raise prices on you now. Like, well, it's not that our earnings, like, that's the thing that's so frustrating is that it's like for these high growth companies, right? If you don't keep the growth up, then they make you pay for it, right? If you don't keep them earnings up, they make you pay for it. That's what you're seeing in Netflix. And so I think that it's kind of driving some of these companies to make very poor short term decisions trying to keep that growth high, but will ultimately screw them over in the end. Okay, so a little bit of wrangling around there. Um, I'm still seeing some pretty decent pressure in the market order flow across the board here in the treasuries. The 5 year does appear to be coming up a little bit more, so maybe the yield curve comes on what would we say unflattened here. That would really be something else if the 5 year decided to catch up here and then they all went higher with the 5 year leading. What do you think? I don't think that's gonna happen. Seems like it's a little bit too, I don't know. Like the flattening has just been so consistent this morning. Why would it abate? S&P 500 is still looking good, and they did make it to that 4,400 target that we had on it. I wonder if you don't see like a drop in the S&P 500, a little bit of a drop, and then, but still ending the day pretty close to 4,400. Something we might see here. Something in my headphone has come loose in here and like rattles around if I move my head too hard. It's big volume going. Well, should I say big volume? I don't know. This is two-way trade up here. That's for sure. It's two-way trade up here. Sellers win that one. Picks back up. Oh, they hit back that. See, this is some aggressive buying there. Yeah, but it still ticks down. I don't know. It's a little interesting. I think what's happening is that somebody is coming in here and is executing a large meta order buy. And they're pretty slow and consistent about it, but there is somebody coming in at places and shorting against it. For now, they're kind of clashing into each other, but I don't know. The way that the buy is going seems more like a large meta order and is probably likely to win out in the long run. But we might get a lot of volatility until then. Let us clear the trades above us here in both of these. Definitely in the 5, yeah. So that we can kind of track. Because what's happening is they're kind of reaching and then they fall back really quickly. So it's kind of hard for me to track how high they actually went. It's been a while since I've seen a move as choppy as this one in the 10-year. See, now they bid 19 half, but nobody's hitting into 20. The buyer's kind of sitting there like, what? You don't want to sell more? Well, a market maker took it. I am seeing a little bit of steepening maybe coming back through. I mean, you can see a tick of it there. Hmm. It seems to me that the DV01 may have increased through here because the rates are being incredibly sensitive to the price changes here. Hmm. See that those last three ticks there were just like a market making activity. It's like the meta orders disappeared. And that one was maybe driven by the ZV. Yeah, I'm all of a sudden really uncomfortable here. Hmm. You say grains are the only one trading nicely at the moment? I don't know. I think that the S&P 500 looks not so bad. Are you able to unplug and go for a walk, etc.? Wow, immediately after the stream, I usually just do the day job. And usually, like 5 seconds after I'm done with you guys, I'm on the morning call. Yeah, this is just terrible. I'm not. I'm not feeling this market at all. It's been very difficult for me to catch a good direction, right? I'm willing to do this one more time, but like, what the fuck? That's so bad for me. 3 in a row. And it's not so bad money wise because they were all pretty small losers, but and I'm being fairly conservative with where I'm getting in at too. Well, the 30-year is it's trying to flatten it again. The 30-year is looking to just make another leg up there. Hmm. Is this happening because I'm misreading the 5 and the 7? No. Actually, maybe because when I'm trying to go short here, the 5-year is lagging. Yeah. I have to say the orders in the order book here in the treasury, like every time that it ticks up and down, I see significant reshuffling in the book, right? So like it kind of seems like there's quite a bit of uncertainty on the part of the market makers that they're really liable to pull their orders here based on whether it just ticked up or down. Oh, could hear something in the background. I'm like, what the heck is that? It was a chicken. Chicken doing the egg song. Going, It's not a rooster, I swear. Yeah, they're flattening this really hard, and that's what's making this trade so hard. If I had taken it in the 30, might have been different, right? But then you have to deal with the insane spread over there. The 4380s was a nice, well, I'm like just going long. Remember, I said they're probably going to go back to 4400, right? You really could have just been long all this morning on ES if you wanted to swing it that way. So I there was a brief while there, back in 2018, 2019, whatever it was, when the yield curve was inverting, right? And I remember seeing some fireworks the first time that the twos tens inverted. But I also remember there being a lot of confusing order flow, and I think that's kind of what we're seeing today. We've got like the options expiration and everything going on too. So that I think is kind of making our read of the flow not very good. But just like the pullbacks have just been deeper than anticipated, and the DVO1 seems to be higher, so the micros are whipping on me more than usual, making it a hard trade. And they've really consolidated around this 19 level in the 10-year. We should stop calling it the 10-year. It should be called the 7-year. Change the ZN to ZS for 7. Found an interesting indicator called the Trix beats me. What is that? Beats me. S&P 500 came off of those highs awfully quickly. So you can see there, it's like the 10-year moves like 1 tick, and here they're pressuring me by 8 ticks in the micros. Oh, you're right. ZS is soybeans. Z7, I don't know. It's got to be the 7-year something. Because it really is a 7-year. The S&P 500 went quite a bit beyond 4,400, and now it appears like it's gonna retest that area. And meanwhile, the Treasury is down 2 ticks. And the 30-year in particular really cooling off there. I can still see some aggressive buying on the parts of buyers in the 10-year, even though prices come down on them. Like you'll see the orders hit at 18 and 18.5, for instance. When it ticks up or down, I don't really see any indication that it's anything other than market making, but some of the market orders from time to time will hit into 18.5. Yeah. Moscow Exchange to resume trading with OFZ on Monday, says bank statement. Reported by Reuters. I see the 10-year going back and forth, but like the 5, it's not the same story, right? Hmm. 7:55. It's been about 20 minutes since we saw that really strong impulse long in the 30-year. Typical triple witcher garbage trading. Yeah, well, I don't know, man. I don't think I've it's been a long time since I've seen the treasuries trade quite like this, though, right? Well, like over in the equities, that looks to me like the triple witcher is a good trade catalyst for them. Yeah. I do kind of suspect with the action that we've had this morning that there is something, like some short covering going on here in the treasuries or something. And that might be why some of the buyers are so uh, aggressive at points. But then early in the morning, you had those Fed speakers kind of short circuited that. Now we've had this move up. Who knows if they're done or not? Okay, well, the 5-year ticked up there that time. So that's maybe a little bit more encouraging. We probably need the 30-year to start doing it too. And the 5-year again there. But the 30 not putting too much up at 19 yet. Oh, well, 38, that's a little better. And ES did settle back into like the average true range stop, just a little bit shy of 4,400, and now they're pushing back up again. So the 10-year had 2 ticks up there. Comes right back very easily. Even though the 5-year is still up there. I think my eyes are like starting to glaze over here. Octavius pointed out here in Discord a while ago there was some big block orders up above us. Yeah. That's kind of been one of the things I've been watching at for the potential up scenario, that maybe we bust through those. Well, the 30-year came along. They're a little bit better, I think. the S&P 500, now that they've gotten to 4,400, it's kind of like, okay, now what? Maybe that just ends up being nothing but chop from here. Dude, I turned the light off in the background and it looks so much worse. Oh, it looked so much better with the blue lights. You need to get lights from up there, but I don't like it when the dog is playing with the light. That's no good. Gonna go blind that way. Yeah, the 5 year is looking like it wants to steepen back up again. Of course, they're going to have to come quite a bit clip lower here in yields for that to actually happen, for them to unsteepen. Okay. That was a good little reach right there by the 5 year. So now the 5 year is up 3 ticks and the ZB has barely moved. Earthquake early warning issued for Japan. Getting another big one? Probably just an aftershock, I would hope. Yeah, well, that time the 10 year kind of coming along a little bit better, but the 30 years still sitting there at 20. Hmm. Well, I do still think that there's a chance that the treasuries will continue up another little clip, but it might not happen until after I'm gone. Well, there's a chance here more like 840 or so, but we'll see. Right now, it really looks like market making has taken over and is just making things difficult. You guys should start watching the twos. Well, I think we're in a situation where the twos would start to be more useful for sure, but I'd have to make some room for it, right? I can see the yields on the twos. I have to say, whenever I've watched the two is such a different instrument. I don't think that you can you can really read the order flow in quite the same way, you know. I mean, sure, you'll probably see some spots where there's like large orders resting and stuff, but I don't know. The whole thing about the queue, did they change the queue back? I think they've changed the queue back and forth on the 2 year there. Hmm. The crypto fear and greed index is 25 out of 100, signaling extreme fear. It sure doesn't feel like that when you watch the chart in Bitcoin. Good grief. I guess they're kind of hanging on for dear life. I don't know. Well, folks, that little move there just put a big wrench in my trade plan here, right? And we're back to long at 16, right? Well, the 30 could come back quite hard, couldn't it? Like you could do it right there, maybe. Or you could put a limit order on there. I don't have that one enabled. That 17 area has been a real pill, right? They just blast through that. I'm kind of wondering if another flip here is you flip here and that this is where it finally really goes somewhere. But you kind of already missed the slip, right? I don't know. I'm really tempted to try and flip around again. See, one of the things that really frustrates me here, I've been really off kilter. Like I feel that well, maybe it just doesn't make sense for me to trade at all because I've taken 4 trades here in a row of losers, and I only got 4 favorable ticks out of that. And the micros. Can you imagine that? So it's like, almost directly trading against me here. And I don't know. I think we did miss a large meta order at some point, but I don't know if it really makes sense that it's going to come back down or any of that, because it still just looks like market making activity for me. But I went both ways. It's usually when you have a couple of losers in a row, it's like you only went one way, right? I went both ways. And I was in the most of those for a decent amount of time too. That last one for the longest, but I mean, come on. Pretty wide range at which I traded too. Forbes, behind Encanto soundtracks, remarkable rise, Disney marketing and paying people. That's probably what. You think the meta order was in Z? I think that might be true to some extent. I think the meta order was a spread trade. Yeah. It's definitely threatening to go lower though, right? Like, there's an iceberg there at 16, but again, 16 is a price that you always kind of see big orders at, and was a kind of a little liquidity hole earlier from the first set of trades that we took, and so I probably expect there to be a decent amount of trade there. They could still blow through that. The meta order was definitely largely in the 30-year, and that one is like rolling back. So I don't know if these decide that they'll just keep the pressure from there or what. See, this right here might be rebalancing, market maker rebalancing. Hmm. I am seeing a little bit of volume hitting back buying in the 10-year, but the 30 years still looks pretty heavy. S&P 500 is having a much more severe pullback now, if not a reversal of the trend. There you go. No tsunami warning issued after Japan earthquake. Okay. The 10-year is lagging here, apparently. 5 and 30 down 2 ticks, and the 10 only down 1. The volume definitely turned south in the 5-year, though. So this could lead to another leg of flattening, couldn't it? Hmm. See, why is the 10 holding back there? There's even some buying at 16.5, trying to pull it up. Hmm. You see that, right? It's just like all the volume flips. Just all of a sudden, just like that, out of nowhere. That's probably more evidence in favor of the Treasury market isn't really going anywhere today. It's just market makers screwing around with the price, yeah. And what time is it? 8:44? Well, the down impulse that we got was around 8:33. I don't know if that was anything. If there is another buy meta order leg here, maybe we could see that. Although the thing is that even though the 5 and the 10 have kind of been wrangling around here and maybe even steepening the curve a little bit, the 30-year has not. The 30-year is still hanging out on the low end there. Not getting much news. I think that we're all newsed out. Probably the larger traders are gone. Wonder how the Biden Xi talk went. That's a good question. I don't know if that has happened yet. I didn't hear anything about a time frame for any of that. Now, maybe the 30-year is going to win out here. Because it is dragging them down. Look at that. Nobody trade 13 yet, though, huh? Or sorry, not 13, 11. 11. Nobody's hitting into 11 in the 30. The dog is trying to wind his way back into here. Nope. Nope, you've been too much of a distraction already, dog. Okay, that time 30-year backed up. Yeah, we're definitely getting some steepening coming in here. Conflicts and confrontations are not in the interest of anyone, according to Chinese state media. Well, I think that here's what I think is going on here in China is that there are some people in the Chinese establishment that really want to help Russia just because, I don't know, they don't like the United States or something like that. And so they kind of played with fire a little bit there. And U.S. intelligence caught wind of it. So when U.S. intelligence caught wind of it and they put that out into the media, China saw that and did not like the reaction at all and are trying to do damage control, is what I think is happening. I can't shake this feeling off that the market, even though I'm not really I don't know, this one hasn't been that bad, but it's incredibly odd, isn't it, that the market action seems to be so random and yet it's just perfectly random against me? Don't you think? So what am I doing wrong here? Well, I can see some pretty strong. I think maybe one of the things that might be screwing me up is that it is Friday, and so probably the passive orders are being more influential than normal, you know? Because yeah, pretty clear like deltas here this morning. But those deltas didn't necessarily predict where the price was going to go. The market makers would like pull prices and screw everybody up, and then are commodity traders really too big to fail? Javier Blas says policymakers better pay attention. From Bloomberg.com opinion. Well, I hope not, because if commodity traders are too big to fail, that's going to be a mess. That's going to be a real mess, right? Okay, the 30 years still hanging out at the bottom. They going to take it down again? Maybe not. We're still seeing like steepening. It seems to me, well, we could try trading on that thesis. We could try buy ZF and sell ZB. But is ZB ever actually going to break? You ever actually going to make any money on that? Because nobody's traded at 11. You might make money on the ZF leg of it. It might the direction may be up. There is a large iceberg on the offer at 17.5. Oh, just let him whine. Yeah, it probably wants in here. Does he have food? Does he have food and water out there? Then there's no reason for him to be in here. So you can see it, like the bid will go weak there in the 30-year. Maybe if you hit it. We'll see if anybody hits into 11. Nope, that time they just shuffled up instead. Still a big iceberg at 17.5. And that bid in the 5-year stiffened up really quickly, right? Well, now they're iceberging at 0.2 3/4 in the 5-year as well. So my child makes similar sounds to the dog. They both go. Now that one's funny. The 5-year almost ticked down, and then the 10-year ticked up, and the 30-year got dragged up with it. But down ticked again. It might be some more ice. No iceberg there now. I straightened back and forth, but no iceberg. Well, let's see here. Where are we going? I can see the gold doing pretty okay here. Still. After that big down move. Covered, and then in the last 5 minutes had a little bit of a push up. The dollar's kind of been interesting. So this move in the dollar was correlated with the move up in the treasuries, was it not? Yeah. So they're actually, the dollar and the treasuries are still trading in lockstep fairly well, which is a problem for us, because if the currency correlations are the most, I think that's one of the things that what screws us up on Friday the most is currency moves, right? So, but where would the dollar go from here? Who knows? It's just as uncertain as over here. This still seems to be showing some flattening, like the 30 is staying down here and the 5 and 10 are trying to pull it up. But there's not much to show here. We'll just scratch this, and hopefully next week we'll be doing better. I don't know. Next week might be a really volatile news-driven week, but it might be a little bit quieter. We might see like some downside pressure on the S&P 500, and then maybe volatility, after all of that options unclenching, then maybe volatility returns back to normal and liquidity comes back in the treasuries. I don't know. But pretty awful trading today. This is probably my worst trading in months. So I don't know what I'm doing. I was a little distracted earlier, but it's really bizarre to just be so dead wrong every time, right? Bird flu may put pressure. Okay. Everybody seems to be concerned about food. Maybe now those concerns are a little bit more warranted, but. All right, guys. Well, I'm going to head out. I will see you on Monday in the meantime.